Violence in Libya is sending oil prices higher, raising energy costs and threatening the global economic recovery. Daniel Poneman is Deputy Secretary at the U.S. Department of Energy. He is attending the International Energy Forum in Riyadh, Saudi Arabia. He joins us now by telephone. Mr. Deputy Secretary, thanks for being with us. Let me ask you this question first. Given what we've seen develop over the weekend, what are your biggest concerns right now?
Well, in terms of the situation in Libya, obviously we're watching the situation with alarm. We join the international community in strongly condemning the violence there, and our thoughts and prayers are with people who've lost their lives. You heard Secretary Clinton speak very clearly to this subject. They'll be meeting about this in New York. Clearly, we believe the government of Libya has responsible to respect the universal rights of their people, including their right to free expression and assembly. And we really call for an immediate halt to this unacceptable bloodshed.
Well, clearly that is the position of the U.S. government and the State Department, as you pointed out. Secretary Clinton made such remarks. But what about the DOE? How does the Department of Energy view the situation? What is likely? What are you concerned could happen next, especially as it concerns crude oil production?
Well, in the broader sense of things, and as you know, we're over here at the International Energy Forum, really we've seen a trend over the last year and a half of general economic recovery, which has had an upward trend on prices. We're watching the situation with concern, and obviously when you have political disruptions, that occasions more concern. I think the important thing that has to happen now is to make sure that we get the proper response. We expect, producers always to step up to the plate when you see these kinds of upward pressures on price. In fact, there seems to be ample supplies in the marketplace. In fact, there seems to be spare capacity, and we're hoping that that capacity will be brought to bear so that it will continue to support our economic recovery.
Mr. Deputy Secretary, you know as well as I do that multinational companies are suspending some of their operations in Libya, perhaps not surprisingly. Can oil markets withstand the loss of Libyan production estimated at between 1.6 and 1.8 million barrels per day?
Well, as you well know, we have an annual daily market in oil of about 90 million barrels a day. So we are fortunate in that we have quite a resilient, broad-gauged set of suppliers out there, and obviously our preoccupation principally today with Libya is on the humanitarian side. But overall, we think that there's sufficient resilience in the markets and among the producers to make up for any shortfall. But I think it's important to note what this really underlines, and you heard it from the President in the State of the Union. Now is the time we really need to be investing in the diversification of our energy resources. I think all of us agree that our dependence on oil is excessive, and that over time what we want to be doing is getting those million electric vehicles on the road, bringing solar costs down so they can compete with power generation, and really have a very diversified source of energy supplies, including efficiency, because that's, in the long run, how we're going to get to a better place.
Mr. Deputy Secretary, thanks for joining us. That was Daniel Poneman, Deputy U.S. Secretary of Energy.